Hi everybody, as it again, Happy New Year. I just thought to kick off the new year, I thought it might be just worth having a chat around or posting a video around some of the challenges that we have, obviously we're facing with COVID, and B, also what are the trends that 2021 might bring, and within that, what the opportunities that we can actually look to take heed of and actually boost both our portfolio but also our revenue. So in terms of trends, I guess some of the big ones that it's worth kind of talking about is interest rate. So for the foreseeable, and I would foresee maybe at least 3 to 5 years now, that interest rate is set to remain at very low levels. This means that for anybody who's got a decent credit and an ability to take loans on, mortgages on, finance on, I think there is a really good opportunity for us to maximize this quite short, relatively short window of opportunity, maybe around 5 year period. And the reason why I say that is because a lot of us will remember paying interest rate in double digits, so up to 10% interest rate at some points in the last 10 to 15 years. Right now we're talking about 3.5% on average for buy to let. So interest rate, I think, is going to play a major difference in how we invest and how much we invest in buy to let. I think the other thing to remember is, right now, it's December. Well, I'm recording this in January 21. We've still got another 3 months of stamp duty relief. Personally, I've taken quite a lot of advantage of that in the back end of last year, having bought about 6 units and saving quite a lot of money in the additional stamp duty relief that we would normally have had to pay. But bearing in mind, this is going to, this is due to stop at the end of March 2021, and my guess, or educated guess, will be that this will stop. I don't think the Chancellor will actually carry on extending this buy-to-let or this stamp duty relief. The reason why I say that is because if you look at the property market since unlocking I guess, of in 2020, summer 2020 to January 21, anybody who's in the market will tell you that the market has absolutely boomed, and because of that, I cannot see why the Chancellor will carry on giving a relief on stamp duty if the property market is doing, actually a lot better than most people thought it would have done. So key, another trend will be that the stamp duty will reduce or will go away. The relief will go away. The other big thing that's going to come down our route is, already with, people are talking about millions of people being out of work because of COVID, because of how companies either fold or restructure or readjust their business model with less people, or just can't actually afford anybody. So, a lot of redundancies will come our way in 2021. The ballpark number has been mooted is around 2 million people to lose their jobs, if not already. So in 2021, you will have a large number of people without work, without a salary, without an income. This, in my view, will then cause a deflationary effect on the housing market, because less people will be chasing after those houses that are available. That then causes the actual market to slow down, or at least stabilize. I'm not dooming and glooming here. I'm not suggesting that the market will crash, but certainly I could expect, and I would welcome, a stabilization of prices because in the last 12 months or 9 months of 2020, we've had a big run on the property market. So trend number 4, I'd say, due to losses of jobs in 2021, I think we will have a slowdown in the property market because demand will be subdued. That then leads me to number 5, trend number 5. I think that because of that, there'll be a lot more renters entering the market, because if you can't afford to buy, you can't afford to get a mortgage, but you still need to live somewhere, you will then end up in the PRS sector. So you'll be entering the private rental sector, and we can expect more people to do that in 2021. And in terms of another trend that I also see, where the challenge with purchasing a house now, it gets even harder if you even forget COVID, you look at the raw numbers, the statistics around earnings ratio to price average. In 2020, the average earnings of somebody in the UK is around 28,000. The average price of a house up and down the country is around 230,000. So straight away, you're getting almost a 8.5 times average wage to buy a house, and that is significantly higher than it has been in the last 50 years or so. On average, is normally about 4.5 times salary. We're now over double this in some areas. You know, if you forget the big cities like London, you know, the scale is even bigger. But because of this full-time salary, the average salary does not get you anywhere near the 230,000. So if you use 28,000 as your average times 4, that gives you a total mortgage amount that you can actually get is around 112,000. That still leaves you or leaves the average first-time buyer with a need to find £118,000 as deposit to be able to get that mortgage. Quite frankly, I mean, that's you know, absurd to think most first-time buyers will have such large amount of money. So because of that, there will also be a deflationary effect on the housing market. So not only because of jobs loss, but also the fact that people can't afford to get the mortgages that they need because of their multiples of income in comparison to the house price is not in keeping now, and it hasn't been for the last 10 years or so. So I think those two coupled together will help to cool down the market in 2021. And the last one I think also that will affect 2021 is staycation. I think, you know, we are in January now. We are in our second major lockdown until middle of February 21. And I think it will take another 6 months before we get anywhere near opening to a certain level where people can even think about going on holiday. So really speaking, we're talking June, July of 2021. Then you add on top of that people have lost their jobs or they can't afford, they don't have the savings, they've had to use savings to pay mortgages, etc., etc. You find a big percentage of the population will not be able to afford to go abroad. That then leaves staycation being one of the biggest form of recreation, I guess, that the families would want to actually enjoy, given the year and a half of hell would have gone through. So I think I can definitely see staycation becoming remaining a mainstay for 2021. That then helps with regards to some of the other kind of property strategies that we can talk about in a little while. So staycation gets a good big thumbs up for me. And in you know, also if you add on to Brexit, the effect of Brexit and the need for visas and challenges like that, and extra cost of visas and stuff, that I think will also have a hit on external travel. So definitely staycation I think will benefit a lot in 2020 or the back end of 2021. So these are the kind of my key trends that I see will happen in 21. But what does that do for us in terms of opportunities? And all the time I teach people on my coaching, one-to-one coaching sessions, that, you know, you just take, you know, you look at what the market's doing and then you try and work out, well, what is the opportunities to be had there? So looking at these trends that are happening right now, I think the opportunities open to us as investors are, in my view, the following. So first, mortgage lending will remain as low as they are right now for the foreseeable, and that means, you know, if you're thinking about either expanding, going into the market, or, you know, doubling your portfolio, I think now's a really good time to actually to do this. In fact, next week I've got another call with one of the major lenders in the southeast, a banking group called One Savings Bank, where I'm having a one-to-one interview with a panel of underwriters, so that we can increase the lending capacity for my company. And the idea is for them also, they want to lend to people or companies who are stable, who have been proven, who are, not missing any kind of mortgage payments, etc., etc. Ultimately the banks make money when they lend money as well. So it is in their interest as well to lend, and they are getting almost virtually zero. They're paying zero interest on their lending from the Bank of England because of QE. Quantitative easing. Because of that, they've got very cheap money, and they're lending it to people like us around 3.5%, 4%. They are, making substantial return on their, on their lending facilities. So I guess, what does that mean? So, if you are squeaky clean, you get your papers in order, you are wanting to scale, build a relationship with your banks, your brokers, and look to ask for opportunities to have these conversations with those banks, so you can actually flag yourself as a big customer of theirs, so you are then able to command, multi-million pound worth of credit facility upfront on day one. So I would say that's where the massive opportunity for us existing or potential budding property investors in 2021. Second one, I can, for all the reasons I've alluded to around the trends, I think the loss of jobs, lack of finance, lack of ability to buy a house or even to rent big flats will mean that the HMO segment will do very well in 2021. You can imagine that if people are on minimum wage, 0-hour contract, gig economy, and a lot more people, if you take the 2 million that I've quoted earlier on, lose their job, a proportion of that go into these gig economy, 0-hour contract type of jobs, they will probably more than likely, if they need housing, they'll probably more than likely end up in one of your HMOs. So I would say HMOs in 2021 is a very good place to also seek to maximize your returns, I guess. The third one, I talked about staycation quite a bit in around the trends. I would say if you have got service accommodation, I would say come post Easter 21, I would start saying you really need to start getting your advertising right, to start taking opportunities to rent those. I would say staycation over the next couple of years will do really well. Service accommodation, as long as they are up to scratch, the good standards, I think you will do really well on your Airbnb type of service accommodation rentals. The fourth one I've alluded to, less people able to buy means more people needing to rent. That then increases the volume of people looking for the same number of properties, because the properties are not growing as per what's needed, I guess. That leaves a gap in between what's needed and what's available. When more renters come into the market because they can't afford to buy, that then leads you to an increase in renters, that then pushes the demand on these properties higher. And as landlords, we are able to command a higher rental on our properties. So I would say in 2021, I can foresee rental increase going up. I would say relatively nicely, or at least there'll be more competition for your rental properties. That means your vacancy rates will be very low. And my last one, I guess from an opportunity perspective, because there's going to be less buyers, furlough ends in April 21, stamp duty relief ends in end of March 21. The up to 2 million people unemployment predicted to happen in 2021. Those kind of key things will reduce the pressure on the property market. This then, results in a price stabilization, and more importantly, because there's less buyers, still relatively a decent volume of properties on the market, that allows us to go hunting for those great below market value opportunities that will come up. Guarantee you it will come up, whether it comes up on Rightmove, Zoopla, on the market in the shape of a block of flats, or on a freehold which you want to title split, which again, I've written a book about called Grow Your Wealth Through Title Splitting. You can have a look at that, it's on Amazon. Or you want to buy via property auctions and try and get that discounted property through that. Once again, I think there will be some really good opportunity to snap up next year, or this year, I should say 2021. So I guess, I'll end it there to say, I think, we've had a tough old year in 2020, personally, mentally, it's been challenging, been mostly in lockdown. Having said that, I think from a business perspective, since the opening up in the summer of 2020, personally, I've bought more properties in those 7 months than I had ever done in the previous 12, I guess, purely because I think there was not much else to do. So, I got my guys to focus on sourcing, buying, and title splitting those big blocks of flats, or buying some below market value properties and doing them. So the same thing I can foresee will happen in 2021. Is just about going out there and spending the right amount of time sourcing. You've got to find the right property and buy it at the right price. If you do those two, you can then recycle your money out of each and every deal that you have. You leave behind a string of passive income generating properties, and within a few years you start seeing the returns coming through in the shape of 2, 3, 4, 5, up £10,000 worth of residual passive income that comes your way per month. So a journey of 1,000 miles starts with one step. Let's get that first step done today. And I'll leave you with the fact that you've got to, if you haven't done so already, please take a piece of paper and a pen and write down your goals for the next 10 years, 5 years, 3 years, and next year. Because I promise you that it will at least get you to think what you are trying to achieve. Then from those goals, you need to write down, well, what are the strategies you're going to follow to actually be able to meet those goals. So again, once again, if you fail to plan, you're planning to fail. You've really got to get this to grips. And again, if you need some help on coaching, I offer one-to-one coaching to a select few people per year, purely because I'm an active developer. I don't have the time to take on hundreds. I'm not a property training company, but what I do expect people to do is to come on to my one-to-one and actually be willing and able to take actions, because I will push you to make sure that you achieve your goals and you walk out of the coaching sessions with actions to take, hold you accountable to them, and then on the next session that we're having, we will be checking whether you have done it or not, just as a accountability. So I make sure I drive people to achieve their goals. So check out my website as well. You'll find information around the property coaching course that I offer as well. But otherwise, reach out. I'll post some of my contacts at the end of this video. And if you've got any comments, any questions, you can reach me on my social medias, Facebook, LinkedIn, and also on email. So till the next one, have a good start of January.